Welcome back. In this video, we will understand the PDRAs that we are talking about in the last three videos. So, what are the PDRAs? PDRA is nothing but premium and discount rates. So, the most important PDRA in our videos is fair value gap. The second most important PDRA is fair value area. Fair value area, in other terms, it is also can be called as order block. There are different types of order block types, mitigation block and breaker blocks. The third most important PDRA is swing high and swing low. Now, for swing high and swing low, there are two types of swing highs and swing lows. Short term swing high and intermediate term swing high. We will understand each of this PDRA in more detail in next slides. So, fair value gap, as we have seen in the first video guide, fair value gap is nothing but a three candle pattern wherein first candle could be of any type, second candle is always an expansion, bullish expansion or bearish expansion, and third candle again could be anything. So there is a gap between first candle high and last candle high. This gap is what the fair value gap. In bullish fair value gap, the first candle high and third candle low has a gap. In bearish fair value gap, first candle low and third candle high has a gap. They don't overlap each other. It creates a gap, and this gap is called as fair value gap. The next PDRA that we'll see is fair value gap. So as we have seen in the first three videos, what price is doing. Price always moves from one PDRA to another PDRA. So, and another thing is, market is always looking for either liquidity or offering a fair value. What is liquidity? So liquidity is nothing but swing highs. And what is fair value? So that fair value we are going to see here. So whenever price expands, it always, after reaching some PDRA, it always retraces to some PDRA again, right? So when it retraces, what exactly it is doing? It is offering a fair value. Now in this bullish scenario, our price has increased a lot or expanded a lot, so all the buyers were involved. So now after reaching this PDRA, the market is offering a fair value so that sellers can also get involved. Once the fair value is offered, price again continues the original direction. Now, once the price reaches another PDRA, where it can retrace to, what it will do? Price, as we said, price will always look for liquidity or offer a fair value. Let's say we have reached this point and we have crossed some swing high, previous swing high. So we have captured a liquidity from this swing high. So what price will do? It will again offer a fair value. So where it can retrace to? It can retrace to this previous level, right? There is no meaning for price to reach all the way to this bottom if it can retrace to this original fair value area in case it is looking for liquidity at some swing low or another swing low, right? So fair value area is nothing but the area where price can retrace to after expansion. Similarly, in bearish scenario, once the price expands and reaches some discount array, it can retrace to offer buyers to get involved. Then price can continue the original direction. After reaching another PD array or offering getting a liquidity, it can again retrace back to the previous fair value area. It may retrace deep into this fair value area based on if it is offering a fair value or seeking liquidity. If it is seeking liquidity, it can retrace back to some swing high, right? That is how the fair value area works. Let's understand how fair value area and order blocks works. So as we see, price expands, then retraces, and then again continues in the original direction. So this retracement is nothing but an order block. So order block is in a bullish scenario, order block is nothing but single or a series of bearish candles which cause price to expand again. So this particular orders in this particular area is nothing but order block, and this whole action is called as a fair value area, as we saw in the previous slide. Similarly, in case of bearish scenario, price expands downwards and then retraces. In this retracement, all the bullish candles or a series of bullish candle or a single bullish candle is nothing but an order block which causes price to move down again. So this order block is successful in driving price to the original direction, up or down. So these are the block order blocks. These candles between the retracement is nothing but order. So there are two type of order blocks that can be in the block is mitigation block. So what is mitigation block? So mitigation block is nothing but another word for mitigation block is swing failure pattern, which is a strong reversal pattern also. So in a bullish mitigation block happens at the end of a downtrend. So we are in a downtrend, and after retracement, the price action fails to create a lower low and creates a higher low and reverses the direction. So this particular order block becomes these bearish candles become a bullish mitigation block. So when price again retraces, it can push the price higher. In bearish scenario or bearish mitigation block, it happens at the end of an uptrend. After reaching a PD array, after some retracement, price action fails to create a higher high and creates a lower high as compared to the previous high and changes the direction to be bearish. So these bullish candles after the price retracement give rise to bearish mitigation block, right? So this is a strongest reversal pattern, a swing failure pattern, also called as a swing failure because our swing failed to create lower low or higher high. Let's understand another order block, which is breaker block. So what is breaker block? So it is again a reversal pattern which happens. So this bullish breaker block happens at the end of a bearish trend or downward trend. So what happens after retracement? Price creates a lower low, but after creating a lower low, price changes the direction. So these bullish candles in the retracement, which is an order block, becomes a breaker block. So this bearish order block fails to create a bearish pattern, so it is called as a bullish order block. So it is a failed bearish order block called as a bullish breaker block. In case of bearish breaker block, it's nothing but a failed bullish order block. So in an uptrend, after retracement, this bullish order block tries to push the price higher, but price fails to reach. After creating higher high, it reverses the direction. It reverses the direction, which causes this bullish order block to fail. So it is called as a bearish breaker block. Is it nothing but a sweep? So these are the two swing highs. This swing high is sweeping this swing high, the previous swing high. So this is a sweep pattern of reversal. This is also a strong reversal pattern. Now let's understand the short term high and short term low, swing high and swing lows. What is swing high? Swing high is an high which has lower swing high at the left of it and lower swing high at the right of it. So the candle previous to it has closed below it, and candle on the right side of this candle, middle candle, has high below the middle candle's high. So this is called as a swing high. Similarly, in case where a candle's low, candle to the left has low higher than our swing low, candle to the right of our swing low has low higher than our swing low. So this is called as a swing low. So these are the short term swing high and swing lows. Let's understand what is intermediate term swing high and swing low. So in case we have a swing high and another swing high at the left and another swing high at the right of our candle, then this swing high is called as a intermediate term high. Similarly, in case of intermediate term low, this low has higher swing low on the left and higher swing low on the right of our price chart. Then this low is called as a intermediate term low. So short term highs, intermediate term high, how they are used, why they are used, how they affect the PDR rates and price action, we will see in coming videos, wherein we will learn more about how price moves from one PDRA to another PDRA and how price moves from to catch liquidity or to offer a fair value. So the journey of this price happens between the PDRAs. So all these PDRAs that we learned in today's video are the basis of our trading pattern or trading strategies that we will develop in coming videos.